You've probably heard quite a bit in the last, say, 6 to 12 months about inflation and the impact it's having. It's a constant conversation in the background, but now in the last 6 to 12 months, we've seen significant rates, right? Inflationary rates right now are super high. As of the latest data we have, it's 8.5% nationwide. So really high, right? Historically, or I should say just a few years prior, 1 to 2% was the numbers we were talking about for inflation. But the reason I wanted to share this video is because, when you're looking at insurance, there's an impact on the inflation side that you want to take into consideration if you're a homeowner. We work a lot with both contractors, so contractors in construction, and then we work a lot with homeowners. And when I talk to our contractors and the construction companies we insure, one of the number one things I hear over the last, say, 12 months is, man, costs have gone up so much. I mean, the same piece or same material that I purchased just a year ago, is up by 30 to 50%. In some cases, you've heard, news articles and things that some materials have gone up by 85%, even 100%. And so materials cost has gone up greatly. And then also the actual cost of labor has gone up. And then the shortage of labor has impacted. So you combine shortage of labor, cost of labor going up, cost of materials going up. You look at then rebuilding a home, and the cost to rebuild a home is significantly higher. So if you're a homeowner and you have home insurance, you want to make sure to review your home coverage specifically in two areas. One is your dwelling coverage, right? So most policies is going to say it's coverage A under dwelling, and you're going to see a number there. The number that's there was probably, figured out in the last 3 to 5 years. In other words, that when you first set up that policy, okay, that number most likely needs to be adjusted. Now, insurance policies have inflation riders, but a lot of times those inflation riders are geared more towards general inflation, right? So like the historical rates we've seen. But when we have a really big jump like we've seen in the last bit, some of those inflation riders are not going to be sufficient to keep up with the increase. So I'd really recommend talking to your agency, or feel free to give us a call. We're happy to go over what you currently have for coverage. Even if you set it up in the last, say, 12 to months to 2 years, so last 12 to 24 months, it's still worth reviewing your coverage because we've seen changes as well, even in the last 12 months. So I would definitely recommend looking at coverage A. And then the other section you want to look at is your personal property coverage. So thinking about all the items you have in your home, right? Say you have a sofa, okay, or your kitchen table. Those two items, if you purchased them, say 3 years ago versus today, in traditional inflationary environments, we wouldn't be too concerned, right? Maybe it went up by 3-4%, maybe 5-6%. But when you're looking at the inflation we've seen in just 1 year is more or less 8.5%, right? You want to think about, okay, do I have enough personal property coverage in my policy as well? Because what I had, just say 150 to 350,000 in personal property coverage, that may no longer be enough to cover what it costs to replace everything in my current home, in my current situation with the inflationary rates that we're dealing with. So those are two coverages I'd make sure to look at. And again, feel free to give us a call if we can be a resource to you. I will leave our number in the comments, but our number is 651-309-6040. And feel free to give us a ring if we can be of help. Thanks so much.